Hey, good afternoon, everybody. It's Mike with smartoptiontraining.com. It is Friday, August 2nd. This is our weekly recap. Uh, if you're looking for this type of analysis on a daily basis, along with live trades, news, option flow, setups, what we're trading, come join us in our live trading room. Come to my website, smartoptiontraining.com, and click on live trading room. You can join us here for a month. Let's talk about this week. It has not been the easiest of weeks to deal with. And the SPY now has gotten a 5% correction and then some, pullback, sorry, and then some. We held the 100-day and we bounced off of it. We have a big gap down from this morning. And what's going on here is we have a little bit of a toxic mess that's coming into the market. We have this weekend, you're going to hear everybody talking. They're concerned about the Middle East and a regional war breaking out. I would say that the market is not really worried about that right now. It was the other day, not here. And we'll talk about that a little bit more. We have Japan stock market cratered today. We've had two pieces of data that now suggest that the market is in a recession or heading into one. The United States is heading into a recession. And that started off with the ISM number yesterday, which was the lowest we've seen since um, the crash, the market crash in 1987. And then we had a very a bad miss on non-farm payroll today. So now you have every head out there and every economist out there talking about a recession, and we're entering into recession. You have an indicator that indicates we just entered recession as of today. I will say we see. The reason I say this is because you're in an election year. No sitting president has ever been reelected in an election year. Well, Mike, Biden's not seeking reelection. Well, his running mate Harris is, and I consider that to be similar. I expect there'll be some printing that'll be done if things start to get really bad. That said, we've had a nasty little candle down here. Volume today, 60 million shares. It's higher than it's been. Also, we have going into this earnings haven't been that good. So on we're heading down towards a nice oversold signal slowly here on the NASDAQ. The S&P 500, the New York Stock Exchange, a little further to go. We held the 100-day, and we're down a little over 6.5% off the highs currently as if we're here. Let's talk about what else is going on. The Qs have been hammered. The Qs are in correction territory. We broke below the 10% correction. We're down about 11.5% here. And you can see we came down, and this candle right here is a big spot to hold. If not, you start staring down at the 200-day. By the way, there's a juicy gap still staring at us back here on the Qs. So at some point that could come into play. The IWM, which had been the belle of the ball, it got absolutely destroyed the last 2 days, down quite a bit. Held the 50-day. It has another gap to fill if they want to come get it, all the way down back here into this 204 area. So again, more room to the downside. The financials came crashing in, holding the 50-day. Energy's been weak. One of the reasons why I don't think the Middle East is a problem right now is crude, which bounced this initial move on crude here, this big move up, came all the way back down as lower. So what the market's saying here is it's not worried about a war in the Middle East. It's worried about a recession, because in a recession, crude doesn't do well, right? People aren't driving as much. People aren't using as much fuel. They're not buying as much. So you're seeing that come in. The other thing we've seen here is bonds. You had an incredibly strong move on bonds here in the last couple of days. Today is just unbelievable. This is signifying, while we're talking about how good bonds strengthening was great for the market, this is not what we're seeing here. We're seeing a flight to safety. So yes, rates are coming down. That is good overall for the economy, but this is a pure out flight to safety. Gold, new all-time highs today, came off of it. And the VIX, we need to talk about this. VIX had a massive spike today. It's come well off the highs here, still well outside the Bollinger Band here with about 20 minutes to go. So likely to close out, indicating we remain risk off. So let's talk about what's going on. And I don't know why I did that in some other sectors. The semis have been hit hard. They've had a rough time. I'm long AMD. The semis down, the 200-day in focus now. I've been long AMD since just around the 200-day back here in this little area right here. I'm not really happy with it. I really thought the earnings they weren't great. They weren't what I was looking for, but they were better than expected, and guidance was decent. Market didn't think so. Back down we come. Starting to look down lower here on AMD. I'm not adding right now. I'm sitting tight. But it was an okay report. Intel was an absolute disaster. I wouldn't trade this with your money. I don't care who you are. So we have some weakness in the semis off of all this. Microsoft was a ho hum type report. It wasn't bad. It wasn't great. Probably likely to hold the 200-day. Amazon was not a good report. Their guidance wasn't good, but it wasn't that bad. AWS still there. I'd like to see this recapture the 200-day, and then maybe I'll add to it. I have a little bit of Amazon on. The other day, I trimmed into the strength on Amazon, and everybody said, "Why are you trimming your position?" I'm like, "Well, because I'm up. I have a nice position, so I took half of it off, and now I'm free to do what I want." So keep that in mind here. We all make money. We get in and out. Tesla weakening here. Here's your 200-day touch. We'll see if it holds. That would be a good spot to try, or when it comes back above it. Meta had the best report of any of the big guys. Beautiful report yesterday. We traded the hell out of Meta yesterday. Came back. It's actually filled that gap. That gap's already gone. I do think, though, if the market turns up, this is when I would turn to. I also thought Apple's report was fairly good, and I would not be afraid that we traded this aggressively this morning as well. NVIDIA, market's in a correction. NVIDIA's in a correction. For what it's worth, Larry Williams said the top in NVIDIA was coming right somewhere just before the top, and he said he wouldn't be surprised if it got back down to the 90 level. Congrats to Larry Williams. He called that really great. We'll see. You got a gap here at 101 if it wants to go lower. So you can still have that at play. Google's been beaten up off of this. The real thing here, guys, is none of the earnings have been particularly impressive. So what you should all do is have a shopping list. What do I want to buy? What do I want to do? Right now, we're trading for cash flow. But what do you want to own? I already own some IWM. I sold all my TNA. I own some AMD, and I own some small Amazon. I will be looking to add to those all at some point when the market turns. Apple and Meta are on my list. I could tell you that. NVIDIA is something I'm toying with. And then maybe starting to look at something like a bank or something else, or maybe some spec action on something like Coinbase. So the bottom line is here, we've gotten a big down move here in the markets. Are we there yet? Yeah, maybe, maybe not. If you really want to look for a turnaround, you'd like to see a gap down, a small gap down now, and then a reversal and watch them come for the market during intraday hours. We've been hard pressed to get that here. I suspect if nothing happens this weekend, we'll gap up on Monday morning. My thoughts there, and then we'll see where we go from there. More earnings next week. Everybody have a great weekend. I'll catch you live in the room on Monday.